Hey everyone, welcome back to the channel. Today we're going to be talking about auto insurance rates and why they're going up. A lot of personal finance is focused on investment, savings, managing your spending, but the insurance part of things is often overlooked. We all know that we have to get insurance and it can be expensive, especially these past few years where it seems like the rates are just going up and up and up with no end in sight. Kind of want to take a moment to go over exactly why they're going up. We've seen recent articles come out talking about auto insurance rate increases for 2020, and sometimes it's kind of a tough pill to swallow because you personally, you and I, we might not have done anything wrong. Clean driving record, no citations, no violations, no claims, nothing. But yet, every half year, every year come renewal, our rates are going up 3, 4, 5, 6%. So why is this happening? I've taken the time to kind of narrow this down to a couple different factors in the market. I know this won't necessarily provide some relief. If you do want a video about how you can save money on your auto insurance, drop me a comment, like the video. Definitely make another video talking about that. But as to why insurance rates are going up in general, first thing we kind of want to take a look at is that people are driving more. Throughout the past 10, 15 years, we've seen the economy kick up, better economy coming out of the recession, more jobs, more people driving, less people just staying home unemployed. And also on top of that, with the recent growth of ride sharing and other gig economy jobs, Uber, Lyft, food delivery, DoorDash, Postmates, we see a lot more cars on the streets all hours of the day, 24/7. You can pretty much call an Uber any time of the day if you're in a major city, and there'll be a car available for you. So this has increased the number of vehicles and people on the road. As the miles driven increases, we see that there's more likely accidents, and obviously insurance companies have to pay for these accidents. Another thing is just general market trends. We all understand that insurance is a business and insurers need to make money at the end of the day. This is a very competitive industry, so from what they've been seeing in the marketplace, if they're not doing so well, they're going to have to increase the rates, and we're seeing this across the board. The one thing is, it is a very competitive industry. You have so many options to choose from. Deciding to be greedy, your rates are all the way up here. If you're not offering service or anything else that can differentiate yourself, no one's going to want to go to you. Doesn't matter how many Allstate commercials, how many State Farm commercials you buy. If your rates are more expensive and you can go elsewhere for cheaper, people are going to go. And also just in the industry, we've seen a lot more natural disasters, earthquakes, storms. Anytime these types of events happen, insurance companies are on the hook for anyone with vehicles that are affected. And throughout the year, we're also seeing an increase in frequency and severity of claims. We'll talk a bit about this later as to why these things are happening. For example, frequency, more claims. We mentioned more people driving, so this may contribute to the amount of claims overall. And as to the severity, the cost of these claims are increasing compared to what it was before. With new technologies, cars are becoming more expensive to repair. We see Teslas, the autopilot, sensors, radars, monitoring devices, all of that stuff are being put into new vehicles. Even if it's not state of the art, we see Toyota is coming out with standard safety features. Most cars these days will come with some type of technology, radars or sensors or blind spot cameras. And this technology is expensive to replace when cars do get damaged and these need to be replaced. Compared to before, 10, 20 years ago, you would not see any of these things on cars. If you get into a fender bender, we'll just swap out the bumper. But now the bumper has so much technology built into it, it's costing more to repair. And I know you're probably thinking, insurance companies are getting more money, right? They're obviously charging us more because they know that my car is more expensive. They're going to charge me more. But just the way that things are, the prices are just going up and up and up. And also medical costs are increasing. So when somebody does get into an accident, somebody gets injured, insurance companies on the hook for that. Someone gets injured, that claim now today is going to be cost a lot more money to settle than if it were the same claim 10, 20 years ago. And all of this combined with just drivers and technology. Bad drivers have always been around, but now with the increase in technology, we have phones, displays, infotainment systems in our cars. Distracted driving has become a real issue. And if drivers aren't careful, they're texting while they're driving, looking at the GPS system, they're not careful, accidents can happen, which just once again contributes to the frequency and severity of these claims. And one last minor thing I want to touch upon is bad credit score. So if your credit does go down, this is more personal. Credit goes down, you could be looking at a rate increase. Insurance companies are allowed to use your credit score in most states in the US in determining your insurance premium. So if your credit score does go down come renewal, whenever they pull those records to update their files, look at what your rate's going to be. You could be looking at an increase. Other things that apply to more on a personal level, if you're losing discounts, so you have an accident, your insurance is going to go up. If you're moving locations, you're going from a smaller city to a larger metropolitan area, your rates will probably go up just because there's more risks associated with bigger city. Higher chance your car could get stolen, damaged, just because there's more people, more cars in the area. And also, if you do let your insurance lapse at all in between, either you don't have a car, whatever reason, if there is a gap, insurance companies will see that and sometimes increase your rates as well when you come back to it. So there are a lot more reasons than what I listed here today, both general and more specific as to why. But I just wanted to give you a quick overview of some of the factors in the market, just so you're aware of that come renewal. Definitely we'll do a follow-up to show you ways that you can reduce your car insurance premium. Make sure you stay subscribed to see that video. Give this a like if you thought it was helpful. Appreciate the time. Thanks for watching. Peace out.